Stop chasing red candles and getting trapped by the banks. Most traders lose money because they enter exactly where institutions are buying.
Today, I'm going to show you how to see the market like a market maker using the QuantFlow algo.
Here on gold futures, notice this price action.
The retail crowd sees a massive selling and panic sells, but our algorithm detects a liquidity trap.
We aren't guessing. We are waiting for the institutional reversal. Notice how we don't just jump in?
Right there.
We wait for the confirmation signal,
and we get a clear buy signal.
We aren't scalping for pennies here, we are riding the institutional flow.
I'm setting my risk to reward ratio to 1 to 5, specifically targeting the next sell signal.
This ensures that one winning trade covers multiple small losses and keeps our edge consistent. While other indicators are lagging, QuantFlow keeps us in the trade during the volatility. We don't panic close. We let the trade breathe. As the price up, look at the profit running. This is where the magic happens, the trailing stop loss. We secure profits automatically. If the market flips, we keep what we made. If it keeps bullish, we maximize the win. Notice this sell signal here? A retail trader would panic and short immediately. But we follow strict rules. We wait for the candle's low to break. It never breaks.
So, we stay in our long position, but we manage risk by shifting our trailing stop loss right below this alert candle to lock in gains.
Now, our trailing stop is hit. Time to flip short? Not yet.
Look at that green cloud below that acts as institutional support.
We never short directly into support. We wait for the market to show its hand. Right there. We get a sell and confirmed retest alert. This is the high probability short entry.
If you follow a fixed 1 to 5 risk to reward ratio, this trade hits your target easily.
If you hold until the next support cloud, you capture the entire move. I personally trade signal to signal.
This allows me to ride the trend fully, or exit at break-even if the market chops.
But here? The momentum is undeniable. Finally, watch this buy signal and the retest. Do we go long? Absolutely not. Notice how the price is stuck right under the cloud? That cloud is acting as a brick wall of resistance. We never buy into resistance.
Instead, we wait for the failure. As soon as the low of that candle breaks, we know the buyers are trapped. The bullish setup fails, and the market crashes lower. That is the power of trading with logic, not emotion.